Let's tell you first what happened in the markets today. The Nifty has inched towards the 22,000 mark, and it has been led by the IT pack, which has gained about 2 percentage points if you look at the IT index. And yes, the highlight of the day has to be TCS. Now, the stock has crossed the market cap of 15 lakh crore rupees. So what is behind the surge that we are seeing in IT stocks, and what does it mean both for the Nifty and employees that work in the IT sector? We'll discuss that. But first, here's a quick recap of today's market action. And for that, Anisha, my colleague, is joining us. Anisha, tell us about the surge we've seen in the IT index, which clearly led the markets up, didn't they?
Well, yes, unlike the last few days, there wasn't a sell-on rally today. In fact, we closed at the highest point of the trading session, or very close to that, above the 21,900 mark, and it was good going for the markets. Three pockets that definitely deserve mention in the trading session today are IT, insurance, as well as oil and gas, because all of these pockets were firing away. Starting with IT itself, wherein Nifty IT is on 52-week high levels. Stocks like KPIT Tech, TCS, HCL Tech were all sitting at all-time high levels, given the positive momentum that we have seen of late. So that index was up almost 3% in the trading session. You also had insurance, which was doing quite well. There were reports that we had told you earlier about the rationalization of the health insurance GST rate, and that is expected and resurfacing. So that's the reason stocks like ICICI Lombard, even ICICI Pru for that matter, Max Financial, HDFC Life, New India Assurance, all of these stocks from the insurance pack as a whole were fairly excited. Last comes the oil and gas space, and whether it was a Petronet LNG or a HPCL or a BPCL or even other names like IOC, etc., they were all up anywhere between 5 to 10%, given the commentary that we have seen, plus the comments coming in from the Prime Minister himself at the inauguration of the India Energy Week as well. So all of that augured well for that pocket. A lot of result reactions as well. We were seeing that big move on AkzoNobel. That stock was up around 10%. There was a big move on the likes of, Triveni Turbines as well. So a lot of these smaller names. But Paytm also continued to make headlines. There was a lot of to and fro today as well. But the stock ended in the green. So the circuit after 3 days, it has finally opened and the stock ended in the green today. So a lot of moving parts for the markets. But then it's all about earnings as well as the commentary coming in on specific stocks and the RBI Monetary Policy Committee, which will decide the future course.
Yes, that's for the future, Anisha. But looking at the way IT pack as a whole has been behaving at a 52-week high, like you pointed out, let's bring in market expert Ajay Bagga to see what he makes of it. Mr. Bagga, as usual, it's great to have you with us on the show. We are seeing that strong services growth in January in the US, reflecting the current strength in the US economy, which, of course, is a key revenue geography for many of our IT companies. Now, the question is, do you see that momentum in the tech index persist on the back of the strength that we are seeing in the US economy?
Markets are forward-looking, Vikram. If you recall, in our last conversation, I told you the worst seems to be over for IT. So we have hit the trough. And now as the data has come out for January, we have realized that nearly 4,500 crores of net investments in the IT sector happened by the FIIs. So they were net sellers in a big way in India in January, but they were buying the IT stock. So clearly, the market is moving ahead of the economy and of the large orders coming back through the US economy. The basic thesis is soft landing in the US economy, recovery in a lot of indicators, and a rate cut coming by June, July, which will lead to a further, improvement in sentiment. The second big thing is that we are seeing both in cloud digitization as well as in artificial intelligence. TCS today, if you see, the Europe Assist order is based on its in-house AI tool, which will help TCS, help Europe Assist recalibrate its IT processes, its entire operations, and they are forming a JV for new case uses for artificial intelligence. So hopefully now we are seeing some of that investment into AI starting to pay off, but our companies are very well placed, just like in 2000 for the century change, where we saw Indian IT companies take off post that. I think AI could be that kind of a seminal event, Vikram, and maybe that's what the market is forward discounting. Orders will increase only in the second half of this calendar year. You will see sideways orders for the next 2 quarters. That's our forecast. But the markets are preempting an increase in discretionary orders by the middle and end of this year. And that's why you're seeing interest returning to the IT sector.
Remember quite clearly you saying that the worst being behind as far as the IT sector is concerned, and looking at all the cues when you see the US economy and the kind of numbers that are coming through and the possibility of rate cuts, though there is uncertainty on that front, but that is the hope. But from the kind of numbers posted by IT majors like TCS and Wipro and HCL Tech, all the potential that AI brings to the table and the kind of numbers we've seen in the last few quarters, Mr. Bagga, how do they compare these large cap stocks and their performance? How do they compare to the mid cap IT players? Where do you see the possibility of higher growth in the next couple of quarters?
I think you have to be very selective in the mid tier, while in the large cap, because of scale, they can invest in AI, Vikram. That's the big difference. And the market is betting on that, that given their scale, they will be able to put down that initial investments and then be able to harvest orders. While in the mid tier, you have to be very careful in choosing companies which will grow despite the environment, and a tough environment at least for the next 2 quarters, if not for 3 to 4 quarters. So that is the differentiator. Today, I would bet on the large cap IT players because of the sheer scale and because right now they are in the investment mode. The harvesting, Vikram, will happen in calendar year FY in calendar year 25 or FY 26. So if you see, the valuations have moved ahead by a year, and now most of the brokerage reports are talking of FY 2026 with an order renewal cycle starting towards the second half of this year and early part of next year. So that discretionary spend, especially for retail and for BFSI, will probably come towards the end of the year. Right now, what will start is the travel. We are seeing a bit in manufacturing. And in terms of geographies, I think US will lead, Europe will lag, and Japan, again, right now we think it will lag. So it will be leadership again from the US markets.
Always good to get your perspective. Thanks very much for joining us with that, Mr. Bagga. Pleasure having you with us on India Tonight.